So I'm making a video mainly for Hazelista. She or he had a request for creating a video on, I guess, how I trade. And I think this is a really good topic. Let me just get my phone real quick where I'm going to pull up a bit more specific because I wrote down a small idea of what I wanted to go over. These are the main things that I use to trade. Now, I wanted to say that learn a bunch of different um, once you learn a bunch of different trading styles, you can kind of combine them all and use the information from all of them to make trades from now on. And that is called confluence. So that's very important. But for now, this is most important. And I think you can be a profitable trade if you really master just the information that I'm going to give. Okay, so first of all, we have to explain support and resistance. Okay, now I think the best way to explain support and resistance is using the candles. So these are the charts. This is TradingView. I don't know how much of a beginner all of you guys watching are, but TradingView is the best charting platform. It's mainly free. There are some exclusive features, but you don't need to get them. I'm using the free version. Okay, the top of a candle is considered a resistance point, okay? So I'm going to go ahead and I'm going to mark several important resistance points, right? Now, question, why am I not marking, say, this one, right? That's technically a top of a candle, but it is not what we call the top of a trend, okay? So now this gets us to the next point. This is what an uptrend looks like, right? It kind of looks something like that, where we go up, we come down a little. We go up, we come down a little. We go up and we come down a little again and we go up, etc. Okay, so mainly we're marking this and this. Of course, there would be a candle there maybe, but that's not as important as the top, okay? So now going back to this chart here. These are resistance zones. What is a resistance zone and why is it important? Well, generally speaking, when we approach a resistance, what happens is we are likely to experience more people selling. Okay, so think of it like this: the price goes up and we touch this resistance zone, right? Based off of this candle. Okay, people are like, wow, this coin Pepe is at a high price. I'm going to sell it and lock in some profits. So what happens? It comes down because the more people that sell, the lower we go, and the more people that buy, the higher we go. Now, if we go above a resistance zone like this, then generally speaking, we are good to go higher to the next resistance zone, which, following my example, could be here. Now, obviously, there are some times where it's not exact. I mean, you can see this compared to this is not exact. It does technically go above it, but then it comes down. I'm speaking about this resistance right here. So that is kind of important to know for later. It's called a deviation. But technically speaking, it still reacted to this resistance. It just reacted a little late. It kind of went above and then went down. It will never be perfectly precise. Okay? So I think that's very important. Now, support is the exact opposite of resistance. So we got this here. That's a support point. We got this here. We got this here. We got this here, etc. So as you can see, we come down and we hit this support point. We didn't actually hit it. We came really close to it. And then we bounce up. Why? Because people say, wow, this was a cheap price of Pepe, so we're going to buy it here. Okay, that's generally the way of thinking. Now, if we had, just like resistance, if we had gone below then chances are we would have gone to the next support point. Sorry, it almost becomes a tongue twister when you're talking about support resistance, and later on when I'm talking about higher highs and higher lows. But yeah, that's the general idea. Now, once again, nothing's exact. And here, we not kind of, we really did just bounce in the middle of nowhere. So you guys might be saying, well, obviously it's not always right. And I agree, it's not always right. Support and resistance is not always correct. Um, Even if we look at other time frames, then this is bouncing in the middle of nowhere, and that will happen. Not everything is predictable. If everything was predictable, then we would all be rich. Okay? Now, I wanted to also explain time frames just in case, really quickly. 1 day means that every candle is 1 day of price action. Weekly is 1 week of price action. Monthly is 1 month of price action. We could even go up to the 1 minute. So, or sorry, down to the 1 minute. So we could even see that it's moving in real time. Uh, Someone might sell right there. They just sold a bit and the price went down. And yeah, you could see this in real time. Now someone just bought a bit, so the price went up. Um, so yeah, and now someone bought again and the price went up a bit more. So yeah, I hope that's a good explanation of how the candles are created. Also by watching that, you can understand what the wicks are, what the bodies are, and yeah, I guess only wicks and bodies, but there's a top wick and a bottom wick. So yeah, I hope that explains that part. Now, how to trade. When you are trading, you want to increase your probabilities to the most extent because this is a probability game. The whole game of trading is probability. The more chances you have to win, then the better. It's like going to a casino. If you throw your money at something that's a 1% chance of winning, and if you win, you'll double your money, then that's a terrible deal. But if you throw your money at something that's a 99% chance to win, and it's making $1 trillion if it works out, then that's a really good deal. Obviously, that would never happen, but the idea is make it the highest percentage and the highest money gained as possible. So, when it comes to an uptrend, and how do you know what an uptrend is? I'll explain in a second. When it comes to an uptrend, we want to only be buying or longing, not shorting. Shorting is selling a crypto in hopes to rebuy later. So, in other words, you're betting the price goes down. Okay, so let's look at Bitcoin. Whenever you're determining uptrends, you want to look at a bit longer time frames. Daily is okay, weekly is probably best. Okay, so anytime here, this is a whole uptrend because we are just going up. Sure, of course, here you could see we went down a little bit and now we're going down a little bit as well. But in general, we are still in an uptrend. And here we were in a downtrend. So in this part of the market, you want to only be taking shorts, and in this part, you want to only be taking longs because only taking longs increases your probability of success and it also increases your profitability. You can have higher price targets. Okay, so we are in an uptrend right now. It's looking to stay in an uptrend because that's kind of how the Bitcoin pattern works. Maybe more on that later. But how do we know that we're in an uptrend? Well, on top of the price just going up and it being visible, we look at higher highs and higher lows. Okay, so what does that mean? Here, you could see we go up and we touch number one, and then we come down to number two. If this number three is above number one, this high is higher than this high. Okay, I hope that makes sense. It's a little bit confusing. Now, if we were to do this is a lower high, and then the price would likely come down. Okay, so in this case, We create a high, and then we create a low. Then we create a lower high, because this high is lower than this one. If it were this is a higher high. And then we come down and we create a lower low. If we bounced here, then this would be a higher low compared to this one. This is a lower low, and then as soon as we're above it, this is a higher low. Okay, I hope that makes sense. Now, this is crucial to learn. Let's actually look at the candles. So I'm going to circle, magnet off. This is a high. This is a low. What happens? We come up and we create a lower high because compared to this, it is below. If it were to come above, that's a higher high, but it didn't. Okay, and then we come down, we create a higher low compared to this one, right? That's higher than this one. And then we create a lower high, and then a higher low, and then a lower high. This is a bit too detailed, but then we come down and we create a lower low compared to that one, or compared to this one or this one. But I would say this one's the main one in the trend, so I would be focusing on this one. Okay, this will come with time, recognizing which is the main low in the trend. Um, these are the main ones. Also, look at how perfect this circle was. Okay, so why does this matter? Because let's go back here because this is a good example. Let's say number 3 is here and number 4 is here. Sorry, let's make this more realistic, right? It's in an uptrend right now. Now let's say number 5 is like that, and then let's just add to this. Okay. Oh, I should really show the other way around. There we go. So we're in a downtrend. Right now we are in a downtrend. Let me fix this. Okay, downtrend. Why is this a downtrend? This high is lower than this high. This low is lower than this low, etc. Okay, now when we are looking for a trade, or when I should say, because this is my strategy, right? We want this to happen. Let's do that. What do I mean by this? I mean we want to create a higher high. So this high is higher than this high. And right when that happens, I set an order to buy here. Or here rather. I hope for it to come down, touch this support point, and then continue the uptrend like this. Something like that. Okay? Now, this is called a trend shift when we go from a downtrend to an uptrend. Why do we know it's a trend shift? Or how do we know when it's going to happen? So let's say we take this away and we're only focusing on this. Well, why wouldn't I buy when we go up here and then we come down? Why wouldn't I buy? Wait, let me just get this right there. Because of the fact that we didn't create a higher high here. We created a lower high compared to whatever was up here. So we come down, we go up, we come down, we continue the downtrend. The only time a downtrend will shift into an uptrend is when we break above the previous high, and then we hope to come down and create a higher low compared to this low. So this makes it very easy for us to have a stop loss. A stop loss is just a safe mechanism so that you make sure that you won't lose too much money. Okay, so I would have my stop loss right below the what's called invalidation point, which would be here. Because if this 2 comes down below, what is that? It's a lower low. So although we created a higher high here, we create a lower low, and that would mean we're probably continuing the downtrend. Okay, so I would have a stop loss right under here. I would have my entry right here, and I would set this entry and this stop loss right when we break above number 4 on the 1. And the hope is for it to go something like this and then continue an uptrend. And generally speaking, you would take profits at the top of the uptrend, which would probably be here. So this I would sell 33% and I would keep the rest for a break above. Now let's get a real life example here. And that would be using this Pepe chart because this was a beautiful trade. But unfortunately, I actually missed it because I have been so busy with work. Okay, so we have this downtrend, lower high, right? Lower low. What happens? We come up, we break above this high. Okay, what did I say I do whenever we break above this high and we create a higher high? Well, I place a buy order. In this case, you can see this was the main low, but this was also another low. So we are expecting a bounce here and a bounce here if this one doesn't work. So as you can see, what actually ended up happening right when this, oh, sorry, I should also mention where the stop loss would be. The stop loss would be right under here. Okay. Now, what actually happened was it came down, it touched our first entry, and it just missed the second entry. And then what happens? Well, so far so good. We have continued on the uptrend, and this looks like it's going to be a higher low. So we should be able to continue on the uptrend. And we should head to our take profit price, or what would be. And I like to mark this in red. I like to color code things, mainly for my trading community, so that I could just say this is the setup. And usually these are green. So these are green is the entry, red is the first take profit point, and blue is the stop loss. Okay, so this is how the play would be. And the beauty of this is since we got the bounce here, we ended up bouncing and we broke above this high to create a higher high. You know, this high is higher than this one. What we do is we raise the stop loss to there because now a downtrend would be confirmed if we went below here because that's a lower low. Sorry, I told you it would become a tongue twister. Um, so now I would cancel this order, that green line. Obviously, this one was filled, and now we raise our stop loss to here because we created a higher high. And now, basically, remember we entered on this candle. Basically, we have lowered our risk a ton. Okay, what I mean by lowering the risk a ton is, let's say this was your stop loss and you were risking $100. This now would probably be risking $20. Okay, so let's say that we continue up and we break above this high right there. Well, then we could do the same thing. Raise the stop loss to here. And then we come down, we go up, we hit our take profit price, we sold 33% automatically. And That's basically how I make my trades. Now, I think I did a pretty decent job of explaining it, but you are the viewers. You are the ones that can be the judge of that. If you have any questions, please message me. Um, I think this is a good strategy to learn. I think you can be profitable using it. And yeah, uh, the more you can learn, the better. And I could also teach so many more strategies, so many more important things. Uh, but yeah, I really hope you all enjoy, and I'll see you guys in the next one.